All right, Manisha, thank you so much for the updates there from the commodity universe. Back to equities right now. By the way, some of the Adani Group stocks, ACC and Ambuja, are well off their morning highs. Let's just revisit that story on the group, the promoters of the group, looking to pare down their pledges. Vivek?
Well, absolutely right. As you mentioned, there has been a bit of profit booking from the top. However, revisiting the story in a statement to the media last evening, what they mentioned was that the Adani Group has fully prepaid share-back promoter financing. And, what they're saying is that they have now concluded the full prepayment of margin-linked share-back financing. So most of the promoter pledges that were further invoked, post the sharp decrease as far as the share prices were concerned, has now been prepaid. Now, what they've also done is they've gone ahead and increased the equity as far as Ambuja financing is concerned by prepaying almost $500 million as, the stated intent to reduce sponsor level leverage. Now, what happened is that so far the promoters have infused $2.6 billion out of the total acquisition value of $6.6 billion for Ambuja as well as ACC. So now the entire prepayment program of $2.65 billion has been completed within 6 weeks. Remember, on March 8 too, the company or the group had prepaid close to 7,374 crore worth of share-back financing.
All right, thanks a lot for that. So Adani Group, all of those stocks are seeing a big relief rally this morning. But ICICI Lombard is the other one on our radar. If you're wondering why, Surbhi has more details on that. Surbhi, over to you.
Hi, thanks for that. So ICICI Lombard is moving in trade today, and that is because ICICI Bank has said that RBI has approved its request for an extension until September 9th, 2024, which was earlier September 2023, to reduce its stake in ICICI Lombard to less than 30%. Now, as per December 2022 disclosures, ICICI Bank has a stake of 48% in ICICI Lombard. Now, following Lombard's acquisition of Bharti AXA, ICICI Bank stake fell below 50%, and it was required by the regulator to reduce its stake to less than 30%. Now, in September 2020, the regulator had given ICICI Bank 3 years to comply with this regulation, which has now been extended by 1 more year. Morgan Stanley says that while the extension provides time to execute what is relatively a large stake sale, the duration of the extension being only 1 year makes it unlikely to result in any durable relief rally in the stock.